Greetings, members, one and all of the Salivation Nation. In our ongoing series called Gold Facts and Graphics, we're presenting some infographics from Gold Corp. And this one is the fourth in the series, and it is 5 reasons to own gold. Let's explore. So gold and the best reasons to own it here, and this is 5 separate ones that we are discussing in this particular infographic. Fascinating indeed. And we can see here the summation is to diversify your portfolio. It provides a store of wealth. It is a safe haven asset, and there are some fundamentals behind it. And contrarianism in value. In other words, it's something to kind of diversify yourself against the what happens with the stock market, the dollar, etc. So let's talk about the first one, and that is to diversify your portfolio. The most simple and compelling argument for owning gold for the average investor is to diversify a portfolio. By owning different asset classes and securities, an investor can limit downside risk. And really that is what it's about. That's a theme that you'll see throughout these 5, I believe, here. So we limit downside. Gold has little or no correlation with most asset classes. This is a result of gold's unique supply and demand mechanisms. So 10% of demand is key in mission critical technologies out there. And it's quite apropos that they're utilizing space technology because does not react, and it is quite reliable in those applications for sure. Mission critical. Then we have a 50% of demand is for luxury gold used in jewelry. It's about 50% of that demand is that case there. Then we have 40% of demand is used as an investment, and really I like to say as a store of value. I don't really see gold as an investment. I think people get the wrong idea when they think about gold as an investment, because it's not about making money with gold. It's about preserving wealth. But to combine those together with the other scenarios can affect gold buying and selling, such as the currency markets, inflationary environments that we see with currencies, gold supply or demand events that we've definitely have witnessed over the past years, and central bank policy decisions, which is actually critical and unique to gold, very unique to gold, because all the major players out there, the central banks, they hold gold. So then we have a correlation of gold here with other asset classes. So average correlation over 10 years, you take into account, like for instance, 2002 to 2012, where you've seen some dramatic lows and dramatic highs you could pretty much use any 10-year period over the past 50 years and account for the same type of situation. So you have a 3-month T-bill. Its performance has kind of been less. At Treasury has been kind of in negative territory. Treasuries in positive territory by 0.2%. Corporate bonds was up, over 0.3%. S&P 500 is showing that performance there. Correlation, not much movement at all. REITs, which I'm not sure exactly what that is, and the S&P GS Commodity Index has performed the best, over 0.3% there. So then what does that mean essentially? So by having a little in common with other assets, an allocation of gold to a portfolio can help deduce the overall volatility. It provides a store of value, and that is the next reason to own gold here. And but throughout history, gold has always kept its value relative to other goods. This makes gold a great choice for wealth preservation, and I believe that store of value is one of the major reasons why I buy it. So you look at it here, in different periods of time, how gold has performed by a measure of 1 ounce. In Roman times, an ounce of gold was enough to buy a quality tailored toga, sandals, and accessories. And during the Great Depression, well, an ounce of gold was enough to buy a quality tailor-made suit, shoes, and accessories. In the present day, still today, an ounce of gold buys a great tailor-made suit, shoes, and accessories. So it shows that essentially the value of gold is constant over a period of time. Now, there are some exceptions in certain asset classes and certain things where it may perform differently, but by and large, when you take into account the vast majority of items and things purchased for living, well, gold does very well in that regard. In contrast, the US dollar, kept from the Depression, would have about 95% less buying power than it did in 1933. In the Great Depression, a dollar could buy more than 10 loaves of bread. Present day, a dollar can barely buy a chocolate bar. And then gold, we're going to discuss why it has a store of value. Number one, its intrinsic value. In other words, its historic value that has been given faith to humanity for literally thousands of years. That historic value is what defines the intrinsic value over that course of time. It's non-perishable, it is rare and has a finite supply, and it has a fairly stable demand. People are always wanting gold out there. People will not turn down gold unless they're wholly ignorant of it. So other proven stores of value over time as well would include fine art, but there's a very narrow market for fine art, I will say. Real estate, there's a lot of maintenance in real estate, but it provides a store of value as well, and you have to pay property taxes on real estate. Fine jewelry is definitely proven a value to a point, at least the precious metals value, but you pay a high premium for fine jewelry most of the time. So you, and then the stones that are ingrained in them or put on them also have their own separate market value. And then silver. Silver provides all of the assets of gold, except for that it is more volatile than gold, and the ratio has widened to a point where silver is also seen, and because of that, silver is seen as an industrial metal much more so than gold. So silver is seen as much as a commodity, if not more so than as money or store of value. And I think that's why you're seeing that wide gold to silver ratio. So the third reason why gold is why we should own gold, another reason, is because it is a safe haven asset. In times of strife, gold is the go-to asset for many investors. While country policies can be changed at a whim, the fundamentals of gold stay the same. That's an important distinction. The currencies of all the major countries, including ours here in the United States, are under severe pressure because of massive government deficits, and that is more true now than ever. The more money that is pumped into these economies, the printing of money basically, then the less valuable the currencies become. And that is certainly very much true to be the case, especially when that money is distributed to the general economy as opposed to like the stock market, which is kind of where a lot of that money is going to prop it up right now. Many hold gold for wealth preservation. Gold is an asset that has no counterparty risk, which is defined as the risk to each party of a contract that the counterparty will not live up to its contractual obligations. And so there it is. It's not dependent on that. And during the 2008 financial crisis, many traders found about counterparty risk the hard way. Gold is one of the only investments that is not simultaneously an asset and someone else's liability. It also doesn't pay dividends as well. That's something to think about. So gold is considered a safe haven against inflation. It's very important, and that's what most of us think about. But it also is a hedge, safe haven against deflation and economic stress that is counted beyond that. It's a hedge against the U.S. dollar. We see the dollar index and gold perform and inverse ratios there. It is a safe haven against uncertainty, which can obviously affect the economic stress and the dollar. And then also geopolitical risk, tensions around the world. What's going on in the Middle East? What's going on with our enemies and the tensions that arise? Maybe that don't even affect the United States directly, but can affect the global markets. Then the fourth reason is the fundamentals. The supply and demand fundamentals of gold also are a great reason to hold the yellow metal. There is a growing research and evidence that economic gold deposits are rarer than ever. The average grade of gold mined trending is down. The undeveloped deposits have a lower grade than producing mines. It is becoming more difficult to find high-grade, large-scale deposits. And despite the world's exploration spending in 2012 reaching an all-time high, no new major gold deposits were found. But we've kind of seen some of that change. The technology is changing and ways to be able to accumulate gold. We've talked about that in previous videos. On the demand side, we have Asian gold buying continues to lift overall demand. 54% of demand comes from China and India. 2013, China imported a record amount of gold. We've seen that increase even more so in recent years. Consumer demand for gold hit its all-time highs in 2013. By 2022, China's middle class will be the biggest in the world with 630 million. We've seen the rise of the Chinese economy for sure in recent years, and I could definitely still see that prediction coming true. Central banks are net purchasers of gold since 2010. Then we have the fifth reason to own gold, and contrarianism in value. Bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. The time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. That's from Sir John Templeton. The reasons to own gold have not changed since gold peaked in price in 2011 and in 2020. The market sentiment for gold has since been negative, but it is during these times that some of the best opportunities arise. And looking back, when this was done, we can see that they were right. So gold price versus cost. The average cost to produce an ounce of gold continues to hover very close to the $1,100 to $1,200 range. And this is not sustainable in the long run, and many gold miners are cutting capital and exploration costs to protect their balance sheets to stay afloat. Of course, they're high in the hog now. Aside from the brief and irrational drop in 2009, gold mining stocks have never been cheaper. I don't know where it is now, but they're probably up, I'm sure, by now. So now that you've seen why you should own gold, it's time to pay attention to the most important trends in gold, which will be the last in the series that we'll go over. But fascinating indeed information here on the 5 reasons to own gold, for sure. And hope you found this video quite useful. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.